Okay, hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. We got ourselves a government shutdown. We got ourselves cheaper oil prices, a Bitcoin breakout, some momentum that's here. Let's talk all about it. Thanks for joining. Thanks for being here every single weekend. Our sponsor of the show is Investors Business Daily. Check out the links in the description of this video. 2 of them for you. Once you're done watching, get yourself those discounts to their Market Surge and their IBD digital subscription. You'll be glad that you did. Let's get into the headlines here. Front and center, U.S. government. It is shut down. It doesn't seem, at least going into the weekend, that the vibes are suggesting there's any resolution on the horizon. It feels like a stalemate out there. So far, markets don't care, right? And that's sort of to be expected. But if this continues for longer, then they're going to probably start to care. And I think most of this impact is really just to the Fed, right? Because we, for instance, missed probably the most important report or data that the Fed is relying on, and that was the jobs report today on Friday. And so if we continue to go through the next few weeks here with no new data, then it's going to make the Fed's job just a little bit more difficult. Oil out kind of moving to multi-week lows here. I mean, to be honest, oil has been very range bound. So it's kind of just returning to the lower end of its range. It's been bouncing around, ping-ponging in this sideways for quite some time. But it is notable here as we start to test those lower bounds. Tesla also making kind of headlines here with record deliveries, which was exciting to see. But it did sort of mark the top in the stock. Short term, of course, it was kind of the local high, and we sold off incrementally on delivery day and on Friday. Now, part of that could just be to the growth prospects ahead. We've got the EV tax credits rolling off, but to be fair, from an EV perspective, Tesla's in the best position to weather not having those EV credits, but maybe, consumers go back to hybrids. So we'll see. But Tesla has been on our momentum quant rockets model here. We've talked about it, I think, multiple times. This was an entry in early to mid-August for us. I still hold the position. We're still long it. There's a little bit of volatility here, of course, in the short term, but it's not disrupting the outlook on our model at this point. So we're still kind of holding long and strong. If there continues to be sustained weakness, then yes, of course, we would be out and exiting, but that's not the case just yet. So we'll see if buyers can kind of step back in, hopefully, at least for my position, that they do. Bitcoin also is quite a story this week. We're going to spend the second half of this video talking about Bitcoin, really going to sort of break down this trade, some analysis, where I think Bitcoin's going. That's going to be in the second half of this video. So if that's interesting to you, make sure you stick around for all of that. Now, getting into the numbers here, again, green across the board. So Russell 2000 back to the top of the pack here. This is our small cap index. This is what has been mostly outperforming. It took a week or two hiatus, but it's back to the top of the list. But really, it was pretty broad-based here across the board. This is what the S&P 500 did all week. Again, pretty comfy, pretty comfortable, not really having too much hesitation so far with this government shutdown, closing off of all-time highs, but still pretty darn good here for the S&P 500. The VIX remains, I'll call it elevated because it's slightly elevated just given where 2025 has landed. We're mid-16s. That seems, probably appropriate. And that's a good sweet spot, I think, for the market to kind of climb a little bit of a wall of worry here. Again, government shutdown, I think, is the biggest, item that it's going to be grappling with. Of course, what the Fed is going to be doing. I think FOMC is next week, and then earnings season is going to be, here before we know it. So 16.5 going out in the VIX. That is well off of the, 14.5 lows that we've seen throughout the cycle. Dollar index here kind of getting comfy, moving sideways, mostly down this week, but just marginally so. And I think if you look here on the right-hand side, it really hasn't gone anywhere for the past month or so. 10-year Treasury yield has declined, which was nice. 4.12, getting a little bit of a bounce back on Friday, but really just going to be interested to see if we can get back down to the lows here and eventually crack below that big important psychological 4% level. We'll have to wait and see for that as of now. Again, breadth here was pretty good across sectors. The big story this week, which I should have had at the top of the list, which we'll review later, is healthcare. This was a huge move for healthcare. Healthcare has been in the doghouse for most of this year, but we had quite a big breakout there. I did share some charts earlier on social in this week with the XLV breakout, so that was nice to see. XLU, XLK kind of in the second and third spot, and really it was energy with those depressed kind of, heavy slide in oil hurting some of those energy stocks. Four sectors here in our bullish momentum state. I'll let you look at that and pause. We got most things in our neutral, and then we still have consumer staples. And newly on Friday is communication services hitting a fresh sell signal for the first time in quite some time. Now, 52-week highs and lows, we're still kind of stagnating here. The one tough part about showing slides like this side by side is just keep a close eye that the scale is different on these two charts, so it doesn't actually show us that looking at these bars, they're not identical, or it's not showing an even race. It is in fact showing that there's still about 3-to-1 on 52-week highs being made versus lows. But as longtime viewers know, we want to see this expand and we want to see this get back north of 200. This is good to see though, because this was one of the warning signs from last week, right? This was one of the things that we said, this is a ratio we're going to want to pay attention to, because this is what last week was looking like. It was a dip in the 52-week low list. It was a little bit of an expansion here in the 52-week high list. Vice versa. I said that backwards. A dip in the 52-week highs and an expansion in the 52-week lows. That was last week. We were, raising it as a potential crack, a warning sign, something to pay attention to. No follow through, right? So that's good. Now we just want to see expansion on the upside. So let's get into our trading systems, and then we're going to get into some charts here. So our all-weather portfolio performance should be updated next week. I said that last week, but the month just rolled over. Is pretty invested here, and quite so, right? So across the board, alts, risk, defensive. Our all-weather is enjoying this market right now. It's having a great year. It's invested and it's riding these trends. There's really no change there. Our short-term tactical system is very long as well, 72%. Now, I believe these are more defensive positions in the more kind of defensive areas of the market. So it's not out there taking on a ton of high beta risk, but it is long. It's got some cash. It's got a short position on, and that's about it. And then our momentum model here, Quant Rockets, we've got 3 models available on our website. This is our momentum model. And I want to highlight this because momentum, again, is just having such a blockbuster move. There were a lot of high beta individual stocks ripping this week. And it does start to give me a little pause of concern here for the first time. I think we've been very good at riding this trend, not getting kind of, bearish too early. And I'm still not bearish too early, but I am just open-minded here that some of these names now are getting quite, frothy, right? Quite frothy. And so, let's pay attention to that. I do think a little bit of a pause digestion or some, back and forth, right? Maybe a few violent days of down might get a good reset here just to keep the excited and over aggressive bulls in check. I think that would be quite healthy. Don't know if we get it, but we're starting to see at least some of those risks open up. Our model certainly enjoying it here, but you should be, managing risk along the way. And in terms of next week, we've got FOMC minutes. So that's something we'll want to pay attention to on Wednesday. And then the rest of the econ data, I don't think we're going to get unless we see some type of resolution here that happens early next week. So that's it from prepared slides. I want to go through some charts now, so stick around. All right, so I want to talk about Bitcoin here because I think it's got its moment in the spotlight, and I think the spotlight's here to stay for a little bit, and I want to break down this trade. So every week we cover Bitcoin. Last week, I think the comments basically were that it was back in the penalty box, and it was back in the penalty box because last Friday was this day right here. Let's see if I can. I always have trouble getting this back. There it is. Okay, so this was last Friday. This is when we did our video and we said, look, Bitcoin was getting its act together. We were starting to get more encouraging, starting to get more of our models that were getting excited about Bitcoin in this range here. And then the range gave way and we broke down and we had a few heavy days of selling coming back down into the August lows. Now, for long-term listeners, 110 has been more or less my line in the sand here for Bitcoin, right? And again, it's not a hard line. It's just that zone, right? Right around 110, that's where you want to see it hold. We were dancing below it in August. I guess we'll say that it ended up holding the line, but it still was looking pretty dangerous there. And then last week, we were back down below this line. And so our analysis here was that it's in the penalty box. We got to get back and hold 110, and then we really got to get back over 112.5 and then 115 to start building that momentum and start acting good again. And so what happened was over the weekend, we ended up getting a pretty meaningful turnaround here in Bitcoin. And so on Sunday night, and then into Monday, I believe this chart is registering futures because we always skip this TC2000 Bitcoin feed always skips Saturdays. But we had a reversal here on Sunday and into Monday specifically, right? And I put out this tweet thread on StockTwits and on Twitter, basically calling out this 2-day rally right here on the Monday when we closed, or in the afternoon before we had closed. I put out this basically saying that this is a day to take notice. This is a point in time that is meaningful here. And I want to break this down because I think, it is very hard sometimes as discretionary price action traders or new students to the market that are learning technical analysis to kind of figure out what's important and what's not, what's noise and what's not. And it's still very difficult. There's tons of noise out there in markets, right? And the way we kind of break this down here and the way I sort of view this was this breakdown, this slide that we saw here, and it particularly this Thursday's candle right in here was something that was suggesting that we're rolling back over. We are coming back down to test these lows. We have lost this momentum. We have put in a lower high. This was a bar in my head that was suggesting that sellers were back full in control of this market. And so your expectation as a trader here, again, is to kind of pull your foot off the gas. If you've got exposure, you got to take it off, or you got to at least hedge it out. And you want to look to see what the action looks like at this prior August lows, right? You're expecting a retest now, and you're expecting to see how much damage this market is going to do. And so what we ended up getting was this very inside doji sort of nothing candle, but this pent up energy here, which again favors the sellers. But what happened was the exact opposite. We got a push up and then we got follow through higher. And this 2-bar here, right? It's the sequence of all of this, but it's this 2-bar reversal occurring in this dynamic where you expect that prices are going down. When that gets flipped, when something really reverses the odds hard, it tells you that something was offsides there, that breakdown failed, and it is a point to take notice. Now, there's more that goes into it than just that candle, but that gets your attention. And that was the first observation here when I posted this. The second observation is that understanding Bitcoin as a market in general, which is something I've been trading for 13 years, when it was a fragmented, internet scam coin, is that Bitcoin is a highly reflexive asset. And what that basically just means is it is momentum driven, and it tends to feed on itself in something that is unlike most traditional markets. There's actually positive call skew. Calls are priced higher than puts when you go out in the money. And all this is to say is that for the past 3 months or so, Bitcoin has gone absolutely nowhere, right? It is just repeatedly blown up these anyone that's trying to take leverage over the past handful of months have just been blown up left and right? All the short-term traders trying to play momentum, trying to get something going in this move. It's just really been a tough game out there, and that's wearing down the participants in this market. Retail focused on AI stocks, I think rightly so, right? A lot of retail traders that I talk to or friends, they're all over the AI or power plays, and they don't care about crypto because it's just not moving fast enough and it's too boring at this point. And I think institutions, for anyone that is trying to play a risk-averse dollar, trying to get rid of dollars or look for some credibly neutral currency, has been riding gold, right? So you've got these two mega trends of momentum that are happening in technology and in a store of value asset, and that leaves just not much room for Bitcoin, right, in terms of attention. And so you start to couple these things into play, and then you also look at some of the highly, speculative or leveraged Bitcoin treasury companies. And I posted this a couple weeks ago, basically just saying on the MSTR, because it was a slow bleed lower, let's get this one last puke and cleansing over with when it was at 320, and then we can begin our Q4 rally, right? This was me posting a few weeks ago, and we got exactly that, right? I mean, this was the sideways range in MSTR. On video, I think we did conclude here when it popped up on Thursday. I said to myself, I said to subscribers here, hey, maybe we aren't going to get the puke down after all. Maybe this was it, and we're getting this breakout to the upside. That didn't actually hold up, right? We did get a rollover, and then we got a puke here on Thursday. This is capitulation on Thursday below that 300 level that we were sort of originally called for. And this happened in lots of different places. So you had, kind of just more of the Bitcoin bulls that were perhaps hanging out in treasury companies now getting liquidated and capitulating as well. Meanwhile, you're entering a very seasonally bullish period for Bitcoin, and covered call writers have been comfy, fat and happy. And IV is incredibly low, 15 percentile for Bitcoin. And so all of this put together really stemming from this price action, but then understanding kind of the macro bigger picture of Bitcoin made me conclude that this is a pretty good opportunity to layer into the long side. And I've probably placed, I don't even know, thousands of trades for sure, tens of thousands of trades, over 10,000 trades in my career. I can probably remember all in my head the number of times I mess around with long out of the money call options, but this felt appropriate because if we are to believe that Bitcoin can get its act together and break out, we would expect that skew, while at a very low percentile, will expand on those out of the money calls. And it does feel like the best kind of reward to risk here. And so posted the trade, posted the thesis here. And so when we look at Bitcoin now and how it followed through this week, it really kind of played out exactly like you would want to see here. It didn't quite break out to all-time highs, but it got really close. It covered a tremendous amount of ground. And this is what the weekly candle looks like now for Bitcoin. Let me move this over. Trading view. This is the weekly session here for Bitcoin, right? This looks pretty darn bullish, and it looks like we're closer to the start of a move rather than an end of the move, right? It really does look something more like a, April kind of run or a November of last year run. It looks like Bitcoin wants to move for the next few weeks here. And so we'll see if this momentum can stick around. I think there's a lot of positive catalysts still kind of in this trade. I think lots of people are flat or not paying attention to it, like we outlined in that tweet. Implied volatility is still incredibly low. There's not a lot of speculation on the call side. Usually you get a lot of froth in an end of the move when you start to get a spike in implied vols or skew, and that's really not there. And I think one of the things that kind of got lost along a lot of people was STRC, which I won't go too much into the weeds here, but this is an important flywheel product for strategy, right? Micro strategy. And this is finally trading up towards par, not quite up to 100 yet, but it's trading 99, which is the highest it's been since it started trading back in July. And so this is going to be a very important flywheel here for strategy to hit the ATM and to really start buying more Bitcoin at a more aggressive rate. And you can look at their preferreds across the board. So there's a bunch of catalysts here. Again, it's a trade. I could be dead wrong, and this could be totally the top, right to the top of the range. Bitcoin trades lower for the next couple of weeks, and the trade is dead money back into the range. It's very possible. So again, buyer beware, but I'm long, very long Bitcoin right now, and I think it's got a good run ahead of it for at least the next couple of weeks here throughout, call it, through October, maybe into Thanksgiving time. So that's it. That's kind of the big breakdown trade I wanted to highlight there, bringing, kind of price action with the bigger picture zoomed into a market. And what else do I have? XLV, I did want to talk about that. Go from Bitcoin to healthcare. But this was notable, and I meant to put this slide at the beginning of the show. This is a very nice kind of breakout week here, heavy volume. Again, healthcare has been going nowhere, so I think that's something to pay attention to. And then here's that oil. Oil dropping back down to these multi-week lows. Again, like we said, kind of just range bound here and not moving over the past few years outside of this general mean. So I don't know that it means a tremendous amount right now, except for maybe, I don't know, selling puts or trying to accumulate at the bottom of the range. Might not be crazy. I don't have any exposure. I'm not doing that myself, but something to think about. So I think that's pretty much it. Gold, continues to just move up, and we'll see. Last comment on Bitcoin that I meant to say was, ironically, this government shutdown could, bring some attention here to Bitcoin as an outside sort of credibly neutral asset, right? That is seen as somewhat of a safety haven. Bitcoin is, it morphs all over the place. It's mostly tied to technology, but you get your brief moments where it trades with gold, and those correlations kind of change gears and change hands. And so maybe if this government shutdown narrative really extends, stocks start to weaken or sideways, some of the momentum comes out of gold and or AI, and Bitcoin's running fourth quarter, and there's chase and underinvestment, you kind of have this, again, kind of perfect storm here. So that's it. Talking my book on this last 15 minutes, but hopefully it's helpful and insightful. And if you liked it, like the video, subscribe. We do these every single weekend. We've got links in the description of the show. Thanks as always for tuning in, and hope to see you back here next episode.